Traders are betting a massive and whopping $1.5 billion against Uber and Lyft succeeding. Hey everyone, this is Kevin the Apptrepreneur, and some of you have been writing to me asking, Kevin, why are we still talking about the Uber and Lyft stock? The IPOs came out, they were disasters, they've recovered a little bit, probably even mellowed out a little bit, and this isn't even an investment channel. This is a news commentary channel. And the reason we're still talking about this is because, well, this is news as far as I'm concerned. This, it's worth talking about. But also, I think drivers are particularly interested in these stocks because this is such a unique situation for people. Most people don't know who the CEOs of the companies they invest in are. They don't know who their bosses are. It's not even a factor. I have done some work for another company, and it was months before I even realized who the CEO was because I'd never heard of him. I think the reason Travis Kalanick and Dara Khosrowshahi are so famous is because Uber and Lyft drivers technically don't have bosses. They don't. They have an algorithm and an invisible boss. And so they need someone to blame, someone to be mad at. And so they're going to be mad at the CEO who pulls the strings of the company, who consistently says he hears our complaints and then doesn't do anything about it. And because he continues to not do anything about it while pocketing millions of dollars himself, that's why drivers are interested in the stock. I have had many drivers tell me personally, and I've read articles, people are happy that the stocks are failing. They really are. They hope that the stocks failing will bring positive change to them, which I'm not 100% convinced that would happen, by the way. But who knows? And yet, it turns out the drivers aren't the only ones who hope Uber fails. Traders themselves want Uber to fail as they have a $1.5 billion bet riding against them. Here's what the article says. Uber's disappointing public debut may be just the start of its problems. Traders skeptical that it can maintain growth and turn a profit have ramped up their bets against the ride-hailing giant to $1.5 billion. Quote, "We've seen a surge in borrowing of Uber over the last week," said Samuel Pearson, Director of Securities Finances at IHS Markit in an email to Business Insider. By the way, when they say that they've experienced an increase in borrowing, that basically means an increase of people shorting the stock. Shorting the stock is a process where you bet that the company won't succeed. The number of Uber shares on loan has soared by more than 160% in the past 2 weeks to 36 million from 13.6 million. Their value now stands at 1.5 billion, meaning Uber short interest has surpassed that of its arch rival Lyft, currently 1.3 billion for the first time. So just to let you know, combined, that is $2.8 billion that are being invested against the companies. These people are investing almost $3 billion that the companies will fail. Yeah, hey, Business Insider, you know that article I talked about like a few days ago, how Uber could be profitable and cut the rates by 80% by 2030? Yeah, let's see if you even get to 2030. Let's not put the cart before the horse. The short-selling boom has been helped by low borrowing fees. However, at nearly 70% of Uber shares are on loan, further demand from short-side sellers will push up those fees, Pearson said. The number of Lyft shares on loan increased to 23 million from 21.6 million over the past 2 weeks, partly due to higher borrowing fees of 35% due to Lyft's smaller float, Pearson said. Yeah, but 1.5 billion, 1.3 billion, there's not a lot of difference there. Shares in Uber have tumbled from their, Uber's underwriters were so worried about a bad initial public offering that they reportedly executed a naked short, meaning they sold more shares than the volume allotted in the IPO, then bought them back to support the share price against downward pressure. The stock's stubborn decline and mounting pressure from short sellers suggests they were right to worry. And that's where we are on that one. So, investors are not happy with this company. And I didn't think they would be. I mean, I think the IPO was pushed by early investors who wanted to cash out early. And the fact that Ryan Graves left the company like a week after the company went public. And there was that one Lyft investor who sold his 2.7% or whatever stake in Lyft before they even went public. Suggests that there are early investors who are very well aware this is not working out the way they had wanted it to. And while I do not want to stop short of saying don't buy the stock, because this is not financial advice. I am not I'm not a financial expert by any stretch of the imagination. I would encourage people to think twice about putting too much into this. Talk to a stockbroker, listen to some financial advice. Some people are very bullish on the Uber and Lyft stocks, but as you can see, they definitely have concerns. And here's what's really funny about the shorting getting to 1.5 billion, because this is how much money Uber is expected to lose during their first financial reports. Uber has pretty consistently lost between $1 to $1.8 billion every quarter. They lose almost $5 billion a year. So, hey, you know what? That value kind of matches up if you really stop to think about it. The investors say, yeah, we're betting this much money that they're going to fail. That's about the amount of money they're probably going to report losing. I don't know that for sure, by the way. Don't quote me on that. There's no insider knowledge here. That's just on personal experience I've had reporting on this company and all the losses. I mean, really, maybe this is why they were always so honest about how much money they were losing, because if they wanted to go public, they knew this would last a long time, and they didn't want to act like, oh, we're doing so great, go public, and then like the first report they had is, hey, we lost $1.5 billion. By being honest about that stuff up front, people can honestly say, well, nothing's changed. They've been losing $1 billion every quarter for years, so what's different, really? I don't know. This is crazy. This is, and a little funny, I have to admit. Count me as one of the people who's taking some sort of sick pleasure in Uber and Lyft losing value. Not pleasure that some everyday people got suckered into these stocks and maybe lost some money. No. I'm talking about the millionaires who basically thought that they would profit off the work, sweat, and tears and abuse of drivers. So I'm taking a little bit of pleasure in this, I will admit. But hey, at least I'm admitting my biases. And because of that, we're going to actually end it right there. I don't think there's a whole lot more to talk about. What do you folks think? Do you agree? Do you disagree? Are you enjoying that Uber and Lyft are doing this, are failing in this spectacular fashion? I would love to know. So comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon's exclusive blog. Also, if gas is getting you a little down, check out the Get Upside app below. It's totally free, but it gets you cash back on every gas purchase. Check us out at the Apptrepreneur vlogs. We are going to be having more content soon. And if you want to talk to me or other fellow rideshare drivers or investors, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.